So, from the morning reading, inane comparisons with the 2000 NASDAQ top. Now that the NASDAQ composite has retaken its 2000 high, the market is a bubble and near the top again. That's what they're saying. During the 6 months leading up to the March 2000 top, that index had a climax run, rising from an October low of 2632 to a March 2000 high of 4573. That's an increase of 74%. During the past 6 months, the NASDAQ has climbed from an October low of 4117 to a March high of 5009. While certainly significant, this rise of 22% is nowhere near the climax run experienced in 2000. Market tops often come with a huge advance that brings everybody in. That's yet to occur this time around. So this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:13 a.m. Central Time, and I'm recording this in preparation for the market day of March the 6th, 2015. Full disclaimers are at the end of the video, but beware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, from the morning reading, a pretty interesting stat there. One other thing I'll draw your attention to from my morning reading, when you look at the smart money, dumb money confidence scores, you have dumb money 75%, smart money 25%. That differential there, 50 points. That is a huge spread between the so-called smart money and dumb money confidence levels. So certainly there are signs that we're overbought and various things that could set us up for a pullback, but that's a long way from a climatic top to the market and some sort of significant bear market being imminent. So let's dive in and see just where are we this morning with these circumstances. In our overnight action, well, we're essentially scratch on the broad market indexes across all four of them. Crude oil's up about 0.39%. Perhaps the biggest mover in the overnight in the markets that we follow is the euro, was down about 0.78%. Bonds are scratch, and then gold slightly up. Obviously, we've got a big monthly employment report coming in just a few minutes. That's likely what the markets have been waiting for. In terms of overseas markets, they don't have to wait for our unemployment report. China is down slightly. Hong Kong also very slightly down. Big mover, Japan up over 1%. Germany and the United Kingdom also essentially scratched. So very little action in the overnight across all these markets that we review each morning for you. In terms of macroeconomic reports, obviously the big one, we have the non-farm employment change and the unemployment rate coming out this morning in just a few minutes. And then we also have a trade balance report that hits as well. Once the market opens, there really is smooth sailing today. Nothing really in terms of a scheduled major macroeconomic report. In terms of our current volatility conditions, we're still relatively low. Short-term VIX is at a 12.16. And you look at the implied IV percentiles across all four of the broad market indices, and you have really just about all of them in the bottom quarter, with the Dow having the highest implied IV percentile. In terms of standard deviation moves, we continue to be quite calm, with only really one standard deviation move in the S&P 500 and also one in the Russell in the last 2 weeks of trading. So very little action going from that standpoint. In terms of daily regular reports, market trend intermediate term phase opinion still phase 3, higher highs, higher lows. Portfolio investor posture still peg in the wall, confirmed uptrend according to IBD, and then also GMI index, a 6 out of 6, all go there. Active trader market posture still stands at very bullish. Our position sizing opinions, whether from the investor position, 100%, or from a volatility active trader position, also 100%. So everything is all go there as well. Market timing. Yesterday we were slightly bullish. Today we're just really one tick stronger, slightly bullish. 3-day outlook slightly bullish. Our market forecast posture, all four indices continue to be in the upper zone, very bullish. They've been falling from their near ceiling levels in recent days, but they're still all in that upper very bullish zone. Our hedge warning status sits at a level 0 or normal. Nothing really to get excited about. And you break that down, volatility-based metrics, there's nothing really to get excited about. Our distribution day count actually fell. The S&P is now at 3 and NASDAQ remains at 2. And I also started to incorporate the New York Stock Exchange new highs and new lows within the past month. And you see the current count, new highs 184, new lows 227. Almost balanced there. Nothing really to get too excited about. And our intermarket indicators are all still risk on. We could call these consolidated and neutral to risk on. Certainly nothing to say that they have rolled over into a risk off status. Option income strategies are acceptable. We have a VIX within the acceptable window. Covered calls, we're still with a slightly bullish status with an equal distribution being called for in the money and out of the money strikes. Put selling, also slightly bullish. And indeed, some of this weakness that we are experiencing right now could be setting you up for entry opportunities to sell puts against a core portfolio basket of stocks that you are willing to own. Let's drop down to other aspects of this report that have been updated daily. Sector market posture. You see this is kind of a Christmas tree. It's red, green, neutral. That we've got all the colors going here. So very mixed right now during this bit of a pause in the action. The stronger ones, telecom, consumer discretionary, consumer staples, healthcare, financials has actually been holding up fairly well, retail. And the weak side, you see energy and utilities, and so quite a mixed picture here, but we certainly see certain sectors such as consumer staples and healthcare remaining the most consistent in their market posture. In terms of percent change, utilities actually had a rebound day yesterday as they continue to try to seek a bottom. Healthcare continues to perform. Staples and consumer discretionary also were up. Energy again taking another hit. So these two, that utilities and energy, that have been trying to find bottoms, continue to be really quite volatile, so you need to really watch your action there. Top industry groups remains retail, railroads, internet, healthcare, and transportation, with biotech just outside the top 5. As always, we greatly appreciate you liking us on YouTube or on your favorite social media platform. And email questions or other support comments to support@falconglobaltraders.com. Additional information, as always, available on the website, including about our daily price guides to support day traders or information about any of the 3 live trading rooms. Disclaimers, as always, hit the pause button if you need more time to review this. And then we greatly appreciate you each and every day in the Falcon Global Trading community. We'll look forward to seeing you back here on Monday morning.